Welcome back, guys. Today we're going to take a look at Mastercard. Now, in the last video, we took a look at Visa, so now we're going to compare it to Mastercard because these are both the two largest players in the credit card and payments processing space. So let's take a look. Over the past 5 years, they're up 83%. This has outperformed Visa, so that is something to note. They are a $400 billion company at this point, whereas Visa was 550 and their price to earnings ratio is 35. Also, we're going to compare them to American Express in the next video, so make sure to stay tuned for that. Make sure to sub. So let's take a closer look at their financials. So Visa was trading at like a 30 price to earnings, and Mastercard is at 35. So Mastercard has been growing slightly faster, 13% last year, whereas Visa was a little bit lower, and quarterly their growth is a little bit higher. Also, their gross margin is higher. Not quite sure if that is an accounting thing or what, but Mastercard has like a 95% gross margin, whereas Visa's was 77. But then their operating expenses are way higher for Mastercard, and so their net margin is actually lower than Visa's. I would expect their margin to expand, but over the past 3 years, it hasn't expanded. But their revenue growth is much higher, so that's nice. In terms of their balance sheet, they do have more debt than Visa. They've got $7 billion in debt, so we'll have to take that into account when we do our model. It's not that much debt, to be honest. They could pay it off easily in a year. So let's look at what they're doing with their cash. Well, they buy back lots of stock. They pay a bit of a dividend. Very, very similar to what Visa is doing with their cash. Yeah, looking at their margins, their ROIC very high, very good. Their gross margin, yeah, around 96%, and net margin at 44%, whereas Visa's was like 52 or 54%. Yeah. Let's look at this. Okay, I wanted to see how much like they barely spend anything on advertising, so most of their expenses is general administrative. Uh, yeah, not quite sure why their expenses are so high compared to Visa, but yeah. In terms of their market share, well, they are a little bit less than Visa in terms of their volume and the amount of cards in circulation. So it probably gives them a little bit more room to grow. But Visa is definitely the leader in the space. Looking at the analysts, well, the analysts are projecting 14.29 up to 16.5 and 27.9 up to 31 billion in revenue. The analysts are projecting a faster growth rate than Visa. Also, something that is very, very important. Let's look at the short percentage. And I was very surprised when I saw this. The short percentage is actually super low at 0.62% for MasterCard, whereas Visa was at 2%. So, literally, just based on that number, I would take MasterCard over Visa because normally the people shorting companies know what they're doing. And so, if people are shorting Visa, but they're not shorting MasterCard, that definitely says a lot. So I would take MasterCard over Visa just because of that. And then we can move over to the cash flow model. So let's take a look. And I put the estimates here, buyback here, net debt, discount rate of 10% because I want the 10% return on all my stocks, exit multiple of 25. That is the exact same as Visa. Currently, Visa is trading at 30 and MasterCard's trading at 35. So then I put the growth rate here, what I project. The analysts are projecting 12% in revenue growth and a little bit higher in their earnings growth also. And the profit margin at 45%. Last year they were at 44.5. I think 45 is fair and probably gradually expanding up to 48% in their gross margin with a growth rate of 12% moving into 2025 and slightly declining from there. This is kind of similar to how I set up Visa's model. And in both these cases, they are slightly overpriced. Literally, this is very, very similar to how Visa turned out. So what would I take? MasterCard or Visa? Well, I would take MasterCard over Visa, mostly because of that short percentage number that we looked at Also, we're going to take a look at American Express in the next video, and Warren Buffett has his largest stake in American Express. So honestly, I think American Express is probably going to be better than both of these, but we'll check that out in the next one. So yeah. Also, if you guys want to try this model, just make sure to check the description. You can use it for free. And yeah, make sure to let me know what you guys think in the comments. Let me know what I missed because I mean, these businesses are really similar, but for some reason the gross margins are like way different. So tell me why that is. And yeah, make sure to hit that like button, and I'll see you in the next video.